Well, let's start with the president's comments on rates. Didn't name the Fed directly, but says he'll use pressure to bring rates down.
I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us all over. The progress that you're seeing is happening because of our historic victory in a recent presidential election.
James Pethokoukis is an economic policy analyst at the American Enterprise Institute. He's here with us for a little while. CNBC contributor and is one. Julia Coronado is president and founder of MacroPolicy Perspectives, former Fed economist as well. Listen, Julia, let me start with you. And not the drama of the comments, as fun as that is. What's the significance of it as far as you're concerned?
I don't see much significance. The Fed has really indicated very clearly that they're going to continue to follow their independent decision-making process. And ultimately, Trump's ability to reshape the FOMC, the first slot he's going to have opening up is January 2026. So in the near term, there's going to be a lot of job owning. We saw that with the first administration, his first administration. And, the Fed is going to make its decisions based on incoming data. Right now, they're in wait-and-see mode, and I expect that will continue to be the signal next week with the January policy statement.
Jimmy, John Spallanzani, others are saying, well, all right, could he say, I want to bring mortgage rates down? And those spreads are still very wide. I mean, is there any other way to get rates down? Even Federal Reserve rate cuts don't seem to do it.
Yeah, I listen. Being pugnacious like that is highly entertaining. It sends a message, certainly to a global audience. Doing it at Davos. But on rates specifically, that's going to be really difficult. Now, I will say that the president jawboning the Fed, if this is what he's going to be doing for the next 2 years. To say that would have zero influence on the central bank, in which have already been attacks on its independence. They have the central bank just utterly ignore the dominant political party in Washington, attacking it for keeping rates too high. To say that, I'm not sure what the right percentage as far as influence on the Fed would be, but it doesn't seem like it would be zero.
Well, Jimmy, I'll follow up with that very quickly because these are all human beings, okay? Jerome Powell, everybody in the Fed, they're human beings. Nobody wants to be attacked like refs in a football game. They are probably influenced by the crowd, even if we want to pretend they are not. That said, we are learning that the Federal Reserve may not be in control of borrowing costs anyway. Maybe if Donald Trump wants to yell at somebody, he should yell at the bond market, because while the Federal Reserve is cutting rates, the bond market is raising rates.
Right.
Well, I believe it was President Clinton who discovered the power of the bond market, and you can yell at the bond market, but the bond vigilantes are super powerful, and they're going to be especially powerful if your national debt is going up and there's no plan to lower it.
Julia?
Exactly. So even if you are successful in intimidating the human policymakers into keeping rates lower than they otherwise might, that could have the exact opposite effect on the long end. If there's a sense that the Fed is being negligent in controlling inflation, or not sort of following its usual process and procedures, that could spook the bond market. So the borrowing costs are much more important further out the curve. The Fed only sets the Fed funds rate. Could they tweak the portfolio? Maybe. But you've got, a body of a lot of policymakers that, will have a say-so on this. That could create noise, and it could spook markets. And that could, again, just backfire in terms of trying to get long-term borrowing costs down.